Hi there. Today, I'm going to post a video on 5 questions that you can ask your financial advisor to determine how competent they are. This can come in very handy if you're interested in evaluating your current advisor, or perhaps you are looking to interview somebody new. The first question I would ask is, how much money are you putting into ETFs and index funds? A lot of investors believe that indexes and ETFs are a great choice for investors. I agree with that. But if you're going to be putting money with an advisor, presumably you want him or her to do something that you can't. And if they're simply going to be putting your money into an ETF, I would wonder why you're paying a fee for that, why you wouldn't just do that yourself. And if they're recommending that you put a chunk of your money in ETFs, you might want to just double check whether they're fully aligned in interest with you. Question number 2, how much of your own money do you have in blank? And blank is basically whatever they're recommending to you. So as an example, if they're recommending to you a stock, well, I think it would be a reasonable question for you to know what percentage of that person's assets are actually in that stock that they're recommending. And the reason I think this is a great question is because it's actually really difficult to evaluate how good somebody is. And it's also difficult to evaluate how motivated they are. By asking this question, if they tell you that they have most of their money or a huge chunk of their money in whatever investment they're recommending, you can rely on that person's own self-interest to profit for you as well. Question number 3, what is the company doing to beat its competitors? So this is assuming that the investment advisor is recommending a stock for you. And if they do, I think that they really should do quite a bit of fundamental research before they recommend that company to you or that stock to you. And this question will gauge how much homework that person has done. For businesses, the number one challenge is competition and whether competitors will come and eat their lunch. Warren Buffett calls this the economic moat, and it is arguably the single most important factor to determine the long-term growth of a company. So if your advisor recommends a stock, they should have an answer for that. Question number 4, what are the best arguments that this investment is horrible? Decision-making is very difficult, especially in the realm of stocks. It is fraught with bias and emotion, especially confirmation bias. Confirmation bias refers to the bias that causes us to reinforce and overweight information that supports what we believe and to disregard information that does not align with our thinking. The problem is, however, good decision-making requires us to see both sides of the argument. And if your investment advisor can only see the reasons for doing something, there's a very good chance that person has not thought through the problem carefully enough. Question 5, what does long-term mean to you? Now, most of us are saving for retirement or maybe our kids' college savings. It's probably a time frame on the order of 10 or 20 or 30 years. So you need to be clear with yourself whether the person that you're working with has the same time horizon. This matters a lot because decisions are driven by perspective and time frame. If your advisor is a long-term investor, it allows them to be very patient, to buy stocks when they're low, to sell high, to do things that will minimize taxes, and to make decisions with less emotion and stay above the fray. In my opinion, that's what you want to see. And if your investment advisor is telling you that long-term means 1, 2, or even 5 years, you may have a disconnect. And here's a bonus question. What is the difference between a cryptocurrency and an investment? And this question will give you some sense of how up to speed that person is on current events and whether the person at heart is an investor or a speculator and whether he or she knows the difference. A quick answer on this is that cryptocurrency is very different than, say, an investment in real estate or a company because it does not in and of itself generate income or value. It's more akin to gold or cash, and it's important to understand that difference. I will later post another video with a lot more detail on cryptocurrencies and my thoughts on this topic. But thanks for watching. Stay tuned.